Thank you, Kevin. Good morning, Marine Money. Good morning, Dubai. I think today is the day we should have a couple of deals in this room. We have already finished the research session. We know what to buy, what to sell. So let's deep dive today. So before I begin our session, which is the important topic, the topic is making the right investment decision. Now, in shipping, making the right investment decision, I will discuss with our distinguished panelists today. But before that, let me ask you one quick question, only show of hands. How many of you believe the best investment today is the second-hand tonnage, not new build? Please show of hands. Good. So it's a mix of new build versus second-hand. So interesting. Let us start and deep dive to understand the insight from our distinguished panelists. So of course, I'm not going to discuss something which is related to tariff, related to Mr. Trump. We have seen whatever craziest things are happening. So my first question is regarding shipping investment. We have seen high assets values, falling earnings, and increasing volatility recently. Is there such a thing as a right investment decision today? And if I can start with Paul.
Well, I think the way that we look at it at Folk Maritime is, and the way I personally believe it is, today you should not invest in a ship if you don't need it. If you don't have a need for operating it, then it's not the time. It's not the time to asset play. I'm talking about containers. Today we have a all-time high discrepancy between freight rate globally versus asset values. So it's a very clear signal there has to be a correction. And the correction is undoubtedly that prices have to come down, and it's not freight rate that's going to come up. So I believe that our philosophy is that we invest in vessel only if we need it. We don't invest it just for speculation. I think it's too speculative at the moment.
Thank you, Paul. How about Adam?
Good morning, everyone. Thanks for having me. I'll give the dry bulk perspective. To be honest, I really do agree. I think today you have two choices. If you already have a fleet, then really your best investment is in your own fleet, improving efficiency, things like that. Or your other option is to invest in your golf game or holiday game or whatever it is. Really, I think that the dangerous thing is to overtrade. To say, actually, I want to increase spot exposure. I want to buy handies or ultras or capes or whatever it is, because I just think there's a lot of downside risk which you need to avoid.
Thank you. How about Shailesh?
Yeah, I'll as Paul gave the container perspective, and I think Adam did the dry bulk. I'll try to cover the tanker side. So on the tanker side, we have a view that first of all, our view is on a long term. We're talking about a 10-year horizon span, and on the tanker side, there is also a counterparty cover. I mean, how would I put it is, on a long-term view, the new technologies are coming. The new build ships are with the new technologies, CII, new regulations kicking in. So for an investment from a new build perspective, nothing has changed. Okay, these are all short-term ripples, which are fine. Now, if you are looking at the trading perspective, then yes, time chartering in is probably a better option, where you time charter in and operate and create your customer base, create your business expansion, but at the same time have a view to invest in on a long-term projects, or a long-term new builds. And on a tanker side, you have a cover that probably, because you got the counterparties are mostly oil majors, so you can probably look at buying a second-hand tonnage, but secure it with an oil major for next 2-3 years to stabilize your cash flow, and then you have another balance period left over to trade. So there can be different strategies that you can develop on tanker side, but we should not forget that the world fleet is aging very fast. The most of the cycle that we started in 2003-4 are turning around. Those ships are turning 20 years old, and so that's how in next 5 years we're going to see a massive, increase of age profile of our fleet. And they're all old technology, non-eco. They don't have any of those new stuff. So we cannot deny that if you have to invest today, I mean, if you really ask if you have the money and if you want to invest, probably invest in shipping stocks, wait for it to go up, and then at the same time start a new build program parallelly.
Thank you. And how about Chris? You want to add something?
I guess back to what you have initially said, there are probably times when you should rather do nothing because you have no idea what's going to happen tomorrow. And last time I checked, or the news we checked last night, it's going to be completely different next day. But for us, it's two exemptions to that. First one is if it's real cash flow backed investments. And back to what Paul has mentioned, we are partners on the container ship side with a lot of liner companies. And if they need more efficient ships, if they need larger ships, you can still do it, and we are still doing it because you get decent charters. So we have 2 days ago, we fixed 3-year charters against ships which we have acquired. So I think that's still a wise thing to do, and it also makes sense from an investment perspective. And the other sector, the other businesses we would continue to invest in these days is more niche when you have structural growth sectors which basically have no adequate supply. For us in MPC Capital, we recently pivoted in offshore wind, a smaller survey and service vessels for the Northern European offshore wind industry. And there you really have ships at the moment working in these fields which have been built in the 1980s, former fishing vessels. And if you can come up with a new type of ship which is not only carbon neutral, which is sustainable, but also much safer to operate, then it is admittedly a niche, but it's still very interesting.
Thank you, Chris. We have seen 2024 was one of the highest new order we have placed in 2024. Even in Q1 2025, a lot of orders being placed. So even staying in the same question, if you look at in the next 3 to 5 years, whether it is dry, wet, gas, container, offshore, where the smart money is going, because as a ship owner, they are still investing. So what do you see? What are the things are happening? And if you can start with Paul on this.
Yeah, I mean, I think, again, coming back to just as a brief around Folk Maritime is that we have a number of things that we have to balance. And of course, also we have to have a certain fleet of our own. Because I also believe after a number of years where we have made a lot of money in shipping, not because we are smart, but because the market has helped us, including last year. Eventually, the old fashion of shipping is to look at your cash flow. It's all about your cash flow. And one of the things is that you need to have a certain fleet size on that. Now, if we're looking into the future and looking into eco ships and modern ships, then alluding to what was said in the previous presentation, we also believe that the delivery time is going to come down. And if that is going to hold, then I can sit on my hands for the next 18 months and see what happens on technology development and see what the market is doing. And I can still get the vessel delivered at the same time as if I order today. So I think these are some of the perspectives. So one of the things which I would recommend and what we will do, we'll probably sit on our hands a little bit and see where things are going, because there has to be a correction coming.
I completely agree with you, Paul. I think in shipping, timing is very important, and cash flow management is one of the biggest risks which you need to manage. Now, if I come back to Chris on the same question, if you want to add something.
I guess the interesting part of our industry is that shipping doesn't really correlate with other sectors. And also the shipping sectors represented here on the panel, containers, tankers, dry, they don't correlate with each other. So there's tremendous opportunity all the times. And also when we recall what we have heard earlier on all the Trump situation and all the tariffs, etc., which is ahead of us, there is certainly a situation which will create more turmoil, and that also means opportunities because, as Paul just mentioned, new building prices, we see them coming down already. There will be a correction in the markets, and so I think there will be different opportunities. But for us, even though when you look at containers these days and you look at the headwinds we've talked about, and you look at the very scary order book, admittedly, if you dig a bit deeper, there's still opportunity. If you look at the feeders, for example, there are still 1,000 ships which are above 20 years of age. Or put it the other way around, the order book is significantly smaller than the amount of ships which are already above 25 years. And in regional trades, that's where we see the growth for the next couple of years. I wouldn't bet on Asia, US, or on Asia, Europe. But in regional trades, there's more tendency to onshoring, more tendency to production closer to the consumer markets, you need more ships. And for that reason, we still think there is opportunity. But as I said before, cash flow back, that's the situation. Initial charters are a must.
Thank you. Adam, if you want to add something.
I think I'd start by saying that I don't really believe in, I guess, smart money in shipping, because I think if the money was smart, it probably wouldn't be in shipping. Probably just something.
But we are in the right room, huh? Don't leave the room right now.
I think on the dry side, I still believe we have a good supply picture in the long run, or in the medium to long run. I think that Chinese new building yards aren't as interested in building sub-Cape. A lot of them want to build a Newcastle Max, but really they'd rather build a Suez Max or a VLCC or something today. And Japan just doesn't have the same capacity. Korea doesn't build dry bulk ships anymore. So on the supply side, I think we're quite safe. In that regard, I think that the thesis that in the next 10 years or so, we still could have a golden age or a golden decade of dry bulk, I still think is quite intact. I just think that betting on geared ships is probably the best bet in dry bulk. I think you don't have to think so much on new fuels or alternative fuels, because it just doesn't work on geared ships today. My personal belief is mainly public companies which have ordered methanol or LNG or potentially ammonia dual fuel, geared bulkers will have a very hard time sourcing that fuel, utilizing, investing in the crews that are going to use it. So I just think it's a very difficult case. I think separate from dry bulk, I also just wanted to give a shout out to VLGCs. I think there will be a very interesting case for the VLGC space in the future, given that it's overordered, given that it's very under attack from the US-China side. And ultimately in shipping, you want to invest in what's being hit the hardest when it's on its knees later on in a year or two. So I mean, 3, 4, 5 years, I think that's really what's interesting.
Good. And Shailesh?
Yeah, now, in case of tankers, when we talk about tankers and gas, I agree with what Adam is saying on the VLGCs. But so last 3 years cycle, if you see it, the biggest impact, the war impact, is on the tankers, where like 400 or plus ships has been now, they all went into dark fleet. The old fleet first went into dark fleet. Now they've all been sanctioned. So now, in fact, and the counterparty in case of tankers is mostly on first class oil majors or the traders. And now they are even screening the past 1 year trading history. I mean, if you're called like Venezuela or Russia, they come into a sanction screening and ask you questions. So I think the trading probabilities for the older ships, which have got into this quick money possibilities, they're finding it very difficult to trade. So that means the tanker demand persists. And for new tonnage, as I said, a new build with new technology, fuel EU, EUAs, and all other things which are coming in, the oil majors are going to cling on to them even if at a premium. So I think on the tanker side, picture is slightly different compared to containers or dry, where the counterparty is the sanction screening and a large amount of fleet being already under sanction or dark fleet. I think there's a potential to invest, or smart money can look at that, because even today, if we see the tanker rates are still holding pretty okay. They're not that bad. I mean, we're down by 20, 30%. But
even in the last few weeks, the tanker earning is increasing, right?
Yeah. So tankers are, because eventually now the OPEC has increased its production, and I'm talking about that's how it's increasing, because OPEC is going to increase production now going forward, and Trump wants to bring the oil prices down, so the demand will flow. Then we talk about storage, so many other things. So I think the tanker demand is sustainable. And most of the oil majors look at trading tanker fleet for like 15 years. After that, it just gets into spot trade. So again, that's where the reason where we see that the demolition would accelerate on tankers, and the overall demand for tankers will keep sustained.
Thank you, Shailesh. Now let us get into a little bit of understand this difference between the new build, modern second hand, and older tonnage. So when you look into the order book, when you look into the existing fleet over 20 years, and when you do this, which offer the best ROI now and in next 2 to 3 years? Again, I'm going back to the same question, but this is specific to the age of the vessel. And if I can start with Poul on that.
I think it's a little bit a difficult question, because there's not a lot out there. So Folk Maritime, we are fishing when it comes to tonnage in the segment below 5,000 TEUs. And what Christian was saying, that it's an underinvested sector. There's not a lot of vessels out there. So let me just give a few points here. If you go out and you need 2,000 TEU vessels today, you will have to pay 25,000, 27,000, maybe $28,000 per day,
Yeah,
and you're locked up for 24 months.
correct.
That's the price today. If you buy a second-hand vessel that maybe has 7 years left, you can operate that vessel, all costs considered, financing, everything considered. You can operate that at least $10,000 less per day.
Yeah,
That's in a 2-year charter, $7.5 million
huge money. Yeah.
of a vessel that may cost you max 20.
This is a big
That's
delta.
the calculation when you're looking at the second-hand market today. So I think this depends again on what you need. So in it, philosophically and from a general perspective, we want to invest in modern ships, but they're not out there at the moment. If we run a study and if we could find a vessel, then of course it's a much better deal, and we will of course also go out and order tonnage. But again, we believe that sitting on our hands for a little bit of while, it will help us. The prices will come down, and we will get it delivered at the same time. But right now, because as I mentioned before, there's a complete disconnect, probably the biggest disconnect ever between freight rates and
Asset rates.
and SMV values. Then anything you can find counts towards buying
Yeah,
in the short run.
correct.
So that's the structure. But of course, it doesn't help the green agenda. It doesn't help. But if you need the vessel for your operation, that's what we are doing. Chartering is simply too expensive at the moment, particularly for a regional carrier, where we have cutthroat freight rates. You need to look at your cost, and that's how the cost drives you. You cannot sit down and expect the things are changing in 2 years after you have paid 7 million above another way to finance the same.
Correct. Good. Chris, if you can add something on this.
Sure. I think when you talk about returns of investment, it's more about, for us, it's more about risk-adjusted returns, because that plays a huge difference in what are you looking at here. Back to also what Paul has mentioned for the older ships, you're absolutely right. What we have been doing though is in MPC Capital, we bought these older ships, but we have retrofitted them significantly. So we actually retrofitted 20-year-old ships, and that made a lot of sense. You change the bulbous bow, you change the propellers. We've done that on many ships, just to provide the lines with more eco tonnage. They're obviously not as good as the new buildings, but it gives you a very solid return on your investment, because you have residual value risk is significantly lower. You get a 2 or 3 year charter. Paul was alluding to that. Yes, it pays well, but it reflects basically not what the box rates are, but basically what the values are at the moment. And the residual value at the end of the charter is very low, or only a scrap value. However, we also have a large group of investors which wants to take the volatility out of the shipping markets. So they are looking more for sustainable long-term returns. And for these, we, for example, bought or invested in new buildings. These ships come with 15-year charters for regional operators. It's the only way, to be honest, if you have the visibility for a certain trade. It doesn't work for everyone, but in some trades in Northern Europe, where you have quite a good supply chain visibility, and where you have cargo owners which really need ships for a long period of time, then you put 15-year charters on these ships. Yes, they are inflation index adjusted. Other ways, it doesn't work. You cannot lock in these rates now for 15 years, because we don't know what's happening around us at the moment, which is very obvious. But these returns may not be as high as on speculative second-hand ships at the moment. But again, taking the volatility out of it and risk-adjusted, I think if you have cargo owners, if you have solid counterparties behind it as partners, it's still very attractive.
No, I agree. I think that says that even older tonnage has a good market, whether tier 1 and tier 2. There is always a market for 20-year-old vessel as well. You just need to do some retrofitting. So coming back on Adam, you want to add something on the same?
On the second-hand versus new build side, I think on dry bulk, it's, in my opinion, very obviously weighted towards second-hand rather than new buildings. new buildings very far out, expensive. Yes, they're more efficient than, for example, a 10-year-old Eco Ultramax versus a Ultramax you'd order in a Chinese yard today. But as I think Chris was also mentioning, with retrofits and with all the technologies that you have available to you today, and really which have been available for the past 10 or 15 years, some things like Muse ducts have been available since I think the early 90s, late 80s. These are not super expensive, very easy to fit. You can maybe extend your special survey, 5 or 10 or 15-year special survey by 2-3 days maximum. And they give you very, very good benefits. On our fleet, we have an average age of 7 years old. All of our ships are eco main engine, and software, hardware upgrades in the dry dock cost us anywhere between $400,000 to $600,000, depending on if it's a Handy or a Newcastle Max that we're doing this on. And that gives us around a 10% improvement on speed and cons, which we then show our charterers, and they give us a better rate. Last year, we had 2 Ultramaxes, one which had full package, one which had a bit of a lesser package to kind of benchmark. And the full package Ultramax earned about, I think it was $1,200 or $1,300 a day more. So you're
There's
getting
a
your
premium you are enjoying on the modern tonnage.
yeah, exactly. And you can't do that on older ships, or not to the same extent, because they have mechanical engines, they have other issues. Chargers maybe won't like them. So I think new build versus secondhand to me is a very easy question. It's definitely secondhand. Modern or older is obviously depending on you as an operator, as an owner, what you want to do. But yeah, I definitely think that the modern ships or the eco ships, 10 years and younger, are definitely the way to go. Very easy, and it's easier to time it. I mean, right now, you have people who ordered ships, new buildings back in 2023, did a really good job, really happy with the price. New build prices kept on increasing. 2024, looking really good, really, really in the money. And then now their ships are delivering in 2 or 3 or 4 months, and they're thinking, wait a second, it doesn't look so good anymore. Like, what's going on here? And I mean, I work on the sale and purchase side for us, and I speak to a lot of brokers who are in this room as well, maybe hiding, but they are here. And when you ask them, they have a lot of owners who are really interested in selling their resales, have been for 6, 12, 18 months, mistimed it. Maybe last summer was a bit of the peak. And anyone who waited for a little bit more is now really, really regretting it. So I think to place a new building order today, when, as the analysts earlier were mentioning, you think that new building prices are going to come down, is potentially foolish.
Good. Shailesh, are you seeing the same difference or premium when you are chartering between older tonnage, say 15-year versus 5-year-old?
So I think I'll address this from a different perspective. We live in a very high interest cost environment, right? This is an all-time high interest cost kind of world that we live in, and that's where. And it doesn't look like, looking at this tariff war and the U.S. inflation along with linked to it, it doesn't look like that the interest cost would come down very soon. Now, like if you see 10-year bond today, are we talking about 4.2% kind of thing? In this scenario, any new build where you have to put in 10-15% today, delivery 28 is going to be expensive because because of the high interest cost component linked to it. So yes, if you look at that perspective, and this is where, unless if you see before the war started, 2022, the yard prices were pretty decent. The yard actually primed up. Today, all the yards are sitting on like 30% margin on their books because they managed to cap on, or rather benefit out of this spike in the interest rates. They will have to come down to realistic levels, and they would, as their order. Right now, they've already booked till 26, 27, but beyond 27, 28 onwards, you can see yards are very soft on their kinds of offers and quotes. And I think those are the ones to target and wait for the right pricing. It has to be realistic. And I think right now, many of the yards were asking last year 15, 20% down payment. They would eventually come down to 10, eventually come down to 5 with different combinations.
But that is your equity cost of the equity for new build.
Yeah. So because we live in a very high interest cost. I mean, if I have to park in like 15% today to wait for 4 years to delivery, my overall cost of the vessel is going to go up, right? So that's the reason second hand is cheaper. Now, again, when we look at second hand, the other advantage of second hand is we are talking about if you buy a 10-year vessel today, she has got left over another 10 years. And in next 10 years, the technology is changing so fast, or the new regulations are coming in, which are going to be like the fuel EU and the CII and the other things, which starts from 2030 onwards, where the second-hand vessels are the right age of getting over. And then you can go for the new vessels by that time. So that's the reason why second-hand is better. When we come down to chartering, where I agree with Poul that it appears that chartering is an expensive option, but I'll I'll give a different perspective. For example, an MR, 5-year-old, 40 mil. You put in, and then you go to charter it and trade spot or put it in time charter. If I put in 30%, like I put in 10 mil and I borrow 30 mil, on 30 mil at 7% today, I'm going to pay 2.1 million as interest cost, which is $6,000 a day. Now, if I'm chartering in a vessel and I'm confident that I won't lose $6,000 a day, I would rather chartering in. Why would I buy? I mean, because I have my money, which I'll put it in shipping stocks or rather maybe order a new build, right?
Yeah.
So that's the view to have every time when you create a portfolio. It's a balance of chartering in, second-hand, new build, all three combinations. And that's the way I think we can continue growing.
Thank you, Shailesh. I think we have some time restriction, but I'll ask one question to Chris. Now, in this room, we have many banks, traditional ship financing banks. Some of the banks are not financing, some of the banks are financing. So, Chris, how do you see, like, if traditional banks are stepping back, what kind of a vessel financing, leasing versus JOLCO or some other structure are happening in the world?
I'm probably talking now for MPC container ships. I think it's all about the diversification and funding sources. We are still using traditional finance. We are still using banks in Europe. We're still using banks in the US, but also we're using Chinese lease, Japanese lease, and to the extent the availability is there, we would also go other ways. We have 4 weeks ago we did a tap issuance of on a region bond. Again, that gives you 5-year money for shade above 7% at the moment, unsecured. I still think that's super attractive. And again, it's more about diversification of these sources at the moment. And then I think you're good prepared.
Anything, Paul, you want to add on, or any challenges you are facing on the vessel financing side?
No, I think from a regional perspective, we see actually quite a strong interest from the regional banks, both Saudi banks but also regional banks, in financing, and also very competitive, much more competitive than what you get in Europe, in the US.
Yeah.
So that's where we are focused on now. I mean, we are putting in. We have the ability to put in quite a lot of equity, which of course makes us a better customer. But we see we are far from having tapped the local market, and as long as there is a local market interest and it's competitive, then we will focus on traditional bank financing.
Thank you, Paul. Thank you. I think due to the time, maybe we can take 1 or 2 questions, Adam. Kevin, yeah?
Yep. Any questions, please, from the floor? Yes? No? Nope. Maybe one last question?
So again, coming back on the vessel financing, and as Shailesh, you also mentioned about the interest rate, high interest rate. Do you see a lot of people are doing interest rate hedging, taking swap or LIBOR or cap or SOFR cap or something? Maybe anyone can.
I mean, we have it as an option, but we have not taken it
Okay.
at the moment. And also you have particularly in Saudi, you have the option whether you're going to finance in dollars or you're going to finance in local currency. And so far we stick to the US dollar normal financing.
Okay. Chris, are you seeing that people are taking some interest rate hedging or anything?
No, definitely people are, but we have only to a very limited extent at the moment.
You know,
Yeah, I mean, we've taken swaps in the past, and it's a useful tool, obviously. But I think right now it's so difficult to make a decision. But obviously the banks are there. We work a lot with National Bank of Fujairah here, who, as Paul mentioned, are very active in this region on the shipping side. So I think there's a lot of opportunities. And in terms of general finance, I think Japan, there's a lot of money, and there's a lot of openness, maybe compared to before, or what to the general thinking is. JOLCO structures, different structures. I think it's quite good, quite easy, and they're a lot more open than you'd think.
Shailesh, you want to add anything on this?
So when you say interest rate swaps,
Yeah.
it's because you believe that the interest rate will further go up, and that's why you want to do a hedge, right? And looking at the historics, or like what Trump is trying to crash the economy here so that the interest rates would come down. I mean, interest rates cannot remain sustainable like this for next 5 or 10 years for the period that you intend to take swaps. So I think, no, don't do anything. Just wait. It will come down.
Thank you. Thank you. Thank you. Thank you, everyone. Thank you.